So now we're come to the part of the show where I talk about what I believe is important for individual investors to consider before you make your investment decisions over the next few weeks. And as always, I have three topics that I want to touch on. And these are more hands-on topics than I usually have. I usually talk about Fed and economic data and things like that. But I found myself recently really focusing on portfolio construction and wanted to share some ideas with all of you. So the first point I think individual investors should consider at this time are trimming profits. I think there are a lot of individual investors that have money in areas of the market that have done extremely well. Well, I think at this point in time, trimming some of those profits make a lot of sense. Once you trim the profits, our second point is, what do you do with the cash? Well, you buy names that have not yet risen. There are a lot of areas of this market that haven't gone up yet. We always talk about the breadth of the market being very narrow. So that leaves us with a lot of options for your profits or the money you're taking off the profitable investments. And lastly, or the third point, stay diversified. There's definitely this, I guess, feeling or a temptation to put all your eggs in just a few baskets. If we know technology is doing really well, which it has been this year, why not buy all tech stocks or put your money in just a few big tech names? Well, we know over time that doesn't necessarily work. At some point, these winners tend to pull back, and some of the ones that haven't done so well tend to move ahead. So you want to stay diversified. So let's get to the first point, trimming profits. And I think we have a couple of great charts to show some stocks that I've actually been trimming some profits in. Some of the names that you'll recognize. First one, NVIDIA. We've taken some profits in NVIDIA. One of the big tech names, obviously everyone knows NVIDIA is the big chip company, now just over $1 trillion in market cap. One of 6 companies to reach that valuation. And these are NVIDIA produces the chips that power artificial intelligence. We've been hearing a little bit about AMD, which also has chips, and we have a graph on that as well. In that space, AMD is trying to take some market share from NVIDIA. We just heard this morning that Amazon, for their AWS, is thinking about using AMD chips for their artificial intelligence versus NVIDIA chips. So we're starting to hear a little bit of competition for NVIDIA, but both these stocks have gone up so much, I think it's prudent to trim. Now, I'm not saying sell the whole thing. I'm saying take some profit off the table, because I think these names can actually go even higher. But I think it's a prudent thing, right? Risk management. You don't want to leave all your profits on the table and then be sorry that you did. You trim a little bit and then you leave the rest in to hopefully move higher. And I know some individual investors have said to me, Alan, the stock continued to go up. It was a mistake to take some profit. Well, it wasn't a mistake if you're just trimming some profit, because we still own the stock and we still want it to go higher. So maybe we would have made a little bit more money. But what if that stock pulls back a little bit? You'll be happy that you took some profits. A third stock that I've been taking some profits in is Meta, or Facebook. Again, another name that we've had on the show many times. And these are, Meta is, I think it's up over 100% year to date. You can see the chart is just unbelievable. They're talking about artificial intelligence. They're talking about their virtual reality headsets, and along with Apple recently, and they're going toe-to-toe, those two companies. But they're talking a lot about artificial intelligence. They have their reels and their stories, and really doing extremely well. I think beyond anybody's expectation. I own a lot of shares for a lot of clients, and taking some profit at this point makes a lot of sense. Getting to our second point, which is, what do you do with the money after you trim some of these profits? Well, you buy some names that haven't gone up as yet. And I have a couple here from a few different sectors. Obviously, probably not going to see a lot of tech names here, although I do have one to show you. But we'll start off with Bank of America. Banks have been one of the areas that have not gone up as yet. I show Bank of America because it's the second largest bank in the United States, and a name that I think eventually will rise. You can see Bank of America a few years ago was up to $50 a share. Today, it's not even 30. I could have here TD Bank, I could have Royal Bank, I could have CIBC, Scotia, any of the Canadian banks as well. I chose Bank of America because I think it is a fantastic bank to own. I saw the CEO in an interview with Brian Moynihan recently. He's talking positively. There's no doubt the economy is slowing. in the United States and even here in our country, and that is affecting the banks, but it makes it an opportunity to buy. As Jonathan Chevreau said, when you have all these other areas of the market struggling right now, it's an opportunity to buy. The second, I guess, stock or chart that we have are of Home Depot. And Home Depot is another name that I've looked at for individual investors that can obviously handle the volatility that owning a name like Home Depot brings. And you can see there has been some volatility, but for the most part, if you look at the right side of that graph, you can see that it's been trading in a pretty narrow range, nowhere near the highs that it was just, again, a year and a half, 2 years ago, over $400 a share. So trimming some profit in tech, buying some Home Depot, I think can make sense for individual investors if, again, you can handle that risk. And the third chart I have, or illustration I have, is a bit different. And this name is Amazon. And one could say, well, that's tech, isn't it? Or, that is considered a tech name by many. And let's say it is a tech name. And this name actually has gone up tremendously over the first 5.5 months of this year. So you could say, well, why are you buying this? This is not down. I'm buying it, or I'm recommending it for certain individuals because I think it can go much higher. So you can buy a name that hasn't gone up higher as yet, or you can buy a name that has already gone up, but that you think will go up a lot more. And that's Amazon. I think Amazon is a name like Google that I think has a lot of room to run over the coming months and quarters. And I think we're just scratching the surface of what Amazon is going to do going forward. The third and last point that I wanted to make to individual investors before you make your investment decisions is this idea of staying diversified. You don't want to put all your eggs in one basket. It's very easy to chase stocks, very easy to chase NVIDIA at this time. All you're hearing is how much potential a name like NVIDIA has. Listen to the CEO, Lisa Su of AMD, talking about how big this market for artificial intelligence is and how much it's actually going to grow. It's going to grow tremendously over the coming years. But do you want to chase these names, or do you want to buy them on good valuations? So I think you want to buy them on good valuations. And I think you need to stay diversified. You want to own some banks. You want to own some retail names. You want to own some tech, some oil, some pharmaceuticals, etc. And this is how you build a diverse portfolio. And this is how you protect yourself in a volatile market. And we've seen markets extremely volatile over the last couple of years. We saw a big drop in the markets last year. Now we're seeing a bit of an upswing this year. So stay diversified. Don't make sure all your eggs aren't in just a few baskets. You want to own names. And again, as an investment advisor, and why individuals call on me to help them, is to build that diverse portfolio. The job of an investment advisor is easy if everything's going higher, and it's easy for individual investors to even do it on their own if everything's rising. But what if there's volatility? What if the market is going up and down? What if you don't know the next direction? That's when an investment advisor comes to the forefront, builds you that diverse portfolio so that you can be protected when times are tough and maximize returns when times are good. So stay diversified, especially at this time where markets might be heading for perhaps a rough patch. If we do see a continued slowdown in the economy, you want to stay diversified.